Welcome back to Infinity Wealth. I'm still in outer space.
Still in space.
I'm always spaced out, mate.
Definitely. Good one.
Listen, Kiki, I just want to share a couple of things with the audience, right?
Definitely.
I'm very proud of this young man. But tell the audience how old you are, Kiki.
25.
25. Okay. And as you can see from the background, Kiki is a proud owner of his own property at the age of 25. And you hear about people struggling to get onto the property ladder and things like that. But, I've been communicating with Kiki the whole time. And, you found it really hard, haven't you, to find the right one, to find the right deal, basically, as well. That ticked all the boxes and everything else.
Yeah,
right?
Exactly. It took a while.
Yeah, and it's an amazing accomplishment. So well done, mate. I'm very proud of you. Yeah?
Thank you. All with your help, so I appreciate it.
Quite a few times as well, and you hear about one house and 25 people going for it. So you had all those issues, but you stuck it out. 6 months it took you, but you stuck it out and you got there.
Yeah,
that's exactly. Good. Well done.
Thank you. Thank you very much.
Okay, what are we going to talk about, Kiki?
Oh, we got lots to cover today. We're going to be talking property. We're going to be talking about what's been happening in the market, especially with all these crashes going on, covering a lot. And we'll also do some charts, like we said last time. So we're going to look at some charts today, and that'll be really, really good and hopefully insightful for everyone watching. So plenty to cover and plenty to look forward to, and opportunities.
And please, this video is being recorded on Saturday morning. It's going to go out on Saturday. The reason why it's important is because of the market dynamics when the futures open up on Sunday evening. And I felt it was right to actually do it today to tell people about what's going on in the markets, right? It's important. Please share it with other people as well. So to begin, I think let's cover cryptos first of all, right?
Yeah. I think let's go for it.
Yeah, one of the things that I noticed on, if you are talking stock market just for a minute for this while, with the Thanksgiving holiday, it was supposed to be a very bullish week for the US stock market, and it was at the beginning. It wasn't at the beginning, then it was at the end, and Wednesday, just before Thanksgiving, the market shot up. But there were market internals that weren't actually at that time, if you were a trader, weren't lining up to what the actual price was doing to what the overall percentage of rising stocks and the advanced decline line was doing, basically. And so it was showing a non-confirmation signal anyway. And then all of a sudden, Friday came along. And people who know me also know that, I also do a lot of cycle analysis as well. And I look at cycles and cycle patterns, which we'll discuss in great detail about, precious metals as well, because I think you've done some of those as well, Kiki, right?
Yeah.
On Friday, one thing that I noticed, just to give you a quick recap, on Friday, the Nasdaq was down it wasn't down a huge amount. It actually showed overall strength compared to the S&P, compared to the Dow, compared to the Russell. I mean, the Russell took a beating. In case anyone doesn't know, the Russell is the small cap index in the US. Yeah, the Dow Jones is the Dow Jones 30, and the S&P is the largest index, basically, and incorporates all the companies in there. But it's quite heavily weighted towards all that big, large tech that have been driving it all up. So the Russell was down 5%. The Dow almost closed. It was almost down 3%. I think it was about 2.7. S&P the same. Nasdaq just off by shy of 2%, or just thereabouts, basically. So it was a pretty dramatic day. But the other thing that that was important on Friday, which is what the futures market on Sunday evening is going to determine. Obviously, the markets took a hit, and one of the main reasons, or they are attributing it to the new COVID variant called Omicron. Is it Omicron? Omicron. Yeah, sounds like a thing from a sci-fi movie, doesn't it? Really?
Yeah, it does.
Yeah, this new variant,
Omicron, Omicron,
right? Yeah. This new variant now apparently is hard to detect, very hard to detect. And also they don't know, because the protein chain around that virus is changed so much, they don't know if the current vaccines will work against it. So there's a big fear trade. Now, in that fear trade, what you should notice is that the dollar goes up in a fear trade. Didn't. The dollar crashed along with the stock market. Gold should be a reserve and a safe haven. It wasn't. It did take a hit, but not much of a hit, right? But there are reasons that Kiki and I will cover on that. Silver as well took a little bit of a hit as well. And silver's been taking a hit throughout the whole month, as is gold.
Yeah.
What was really weird was, with the expectation of rising interest rates, the bond market went up. So, there's an inverse correlation. If the bond goes up, the interest rates go down. So the bond market, there was a huge amount of buying straight into the bond market, right? Sell off in cryptos. So Bitcoin took, a pretty big hit. I think at some stage it was down at 7% on that day. So there was some mix. It was almost like liquidation that was going on. Liquidation by big people. Right? They didn't care. They were selling it. Normally you'd find, because when fund managers have to, fund managers cannot go into cash. They cannot go into cash, right? Especially in Europe. If a fund manager goes into cash in Europe and he deposits that money in a bank account, he's actually going to be paying money to the bank to actually look after his money. So most of these these managers, fund managers, then tend to go into the bond market when there's a real fear around. So that dynamics on Friday, opened the eyes of a lot of people. Now, people were expecting this anyway, because we've over-egged everything, right? Which you'll cover in the charts. And I think this may just have been an excuse, but it will be very important on Sunday night. And the futures open up at 11 o'clock in the evening, UK time, right? 11 o'clock in the evening on Sunday, they open up. Then the Asian markets follow an hour after. So it'll be interesting to see how the futures open up, whether over the weekend they've said, actually, vaccines will combat it. It's not a problem, and the problem will go away, in which case, the market will shoot up. But the other thing that I've been noticing is if you cover options, all the option traders look at implied volatility. They also look at expected moves, weekly expected moves to the option market, right? It's one of the largest expected moves that we've seen for a long time, up and down, right? So they're not sure which direction it's going to go, but it's 150 point S&P points up, or it's 150 S&P points down, right? Now, I suspect it will be down, right? But I can't, obviously it just depends on Sunday night to see how the whole thing opens up and whether there is a massive flush down to scare a lot of people out of the market, basically. So that's one of the important things to cover, right? We'll talk about, I think, also property stocks as well, and what indication in the UK they're giving an insight. Are they giving an insight on what their future property prices will do? A lot of people who follow me and understand the work that I do, I look at charts, I look at property stocks, I look at expected moves, and sometimes some of these property stocks can also give you an indication of where property prices may be heading. If property prices are going to keep rising, obviously house builders and home builders, their share price should be rising. Yeah, they're going to make bigger profits, aren't they? Right. But with inflation, the way it is, everything else, this is the most weirdest market that I've seen in a very, very long time. It does remind me of the dot-com bubble. That's not to say that I think it was on Tuesday or Monday, the Nasdaq just went completely ballistic up. Unbelievable. I was short. I was short.
Yeah.
I was just watching this going, shit, I had to add, but yes, and closed out a few positions, and I had to add to top up the funds, basically. But it was an exceptionally weird market. And then for it to just gap that far up and then reverse and come all the way back down, it almost seemed like a climactic top. Now, I don't know whether that will be the top, right? I'm not ruling that out, or whether we'll come back down and then we'll go back up later on in, towards the end of this year, beginning of next year, and then tail off again. I don't know. But, we'll do analysis all the time to have a look at that.
Yeah.
You got anything to add, Kiki?
No, I think you've covered a lot of it. I think more on the crypto side, and I think we'll talk about, and I guess precious metals. I think the one key thing, I think we'll talk about this as well, is obviously December's coming up, especially with gold, silver. So it's an important time, and quite transparently on it and openly from my side. So when we were doing all the great Nvidia stocks and stuff videos in the year, and if you capitalize on those, you would be thanking us. But I sold a lot of those stocks, and I'm now just reshuffling, and I'm in gold quite heavily at the moment, because I know what December runs, and normally again that might be a risk, but that's something I'm willing to take. But so it'll be an interesting month. Seasonally,
gold and silver they perform very well in December, January, February. As does the stock market as well, but they perform very well. So gold and silver perform very well. So it's just an interesting time to see where those futures will open up, basically.
Yeah, exactly.
But I remember, I remember texting you, and because you're Nvidia, you've done very well in the. I said to you, have a look at that chart. I didn't want to force you. I just went, have a look at that chart, right? That chart is in like la la land at the moment. Sell some, always, guys. The stock market is not like the property market where you've got to hold on to it. It's difficult to sell and stuff like that. But the stock market, you can never go broke taking a profit.
Yeah.
When it's the rising market, you should be scaling out. When it's a falling market and you think it's going to go back up, you should be scaling in, right? And building a position. But building a position like that to then get out when it goes back up again. So it's that little curve that you have to keep following.
Yeah, definitely.
So shall I cover a couple of charts? What do you think?
Yeah, let's see. So I'm excited, and I'm sure the audience is excited for.
Yeah, so let's see. Share screen.
We all love some charts.
Yeah, well, let's have a look. Share. Oh, I don't know what that is. Hold on, where are we?
Your Zoom screen.
That's my Zoom screen. Yeah, and there we go. Oh, okay. Well. It keeps right. So this is Trading View. Yeah. So what I've done, actually, this is NVIDIA, right? So this is the year chart of NVIDIA. Kiki, you would have probably sold it up somewhere up there, basically.
344 is where I sold it.
There you go. Smack on, mate. Right, smack on at the top. Well done. Round of applause, Kiki. Right? There is a gap, right? That gap will fill, right?
Yeah.
There is a gap. Yeah. But it's now below the 5-day moving average, right? It's below the 5-day. It's probably, most of these stocks, if you look, they do come back to retest their 50-day. They do come back to retest their 50-day if you look over time. Yeah, they come back to retest. First of all, retest to 20, maybe take a bounce up, then back down again. But if you look at the all-time chart, this is the all-time chart of NVIDIA. Now, NVIDIA is a great company. Don't get me wrong. It's a fantastic company, right? If I put some Bollinger Bands on there, that is way out on the monthly chart,
massively
way out of the Bollinger Band, basically, right? So it's left planet Earth, this stock. I know that there's a lot of bullish sentiment around on the stock, and it's right. It is a good company. Yeah, but one of the main things is it's gaming and the shortage of microchips, which is add to the inflationary pressure as well. So all the chip stocks have done phenomenally well, and Nvidia has been the prime example of that, basically, right? So yeah, at some stage, corrections are healthy. Things like this are not healthy. As an investor, we are really looking for nice, steady, because what happens is when they go parabolic like that, if you remember what happened to Bitcoin, right? Yeah. When it went parabolic, what happened? It crashed. It went straight back down because all the buyers who wanted to be in have bought. There's no one else now to actually buy. They've all rushed in, and this is FOMO. This is actually FOMO. Yeah. When people are FOMOing in, you should be actually scaling out. So if you look at Tesla as well, and I'm not, this is the Tesla chart. Now, with Tesla, I know that we've got a lot of people who love Tesla. Big fan of Elon Musk, of what he's accomplished. I think the story is absolutely incredible, right? The fact that, Tesla almost went bust. He stayed with it. He went with his gut. Fantastic, right? Great guy too. That bit is to be admired. There's a lot of things that are not to be admired about him, but that is something that is to be, he stuck it out. He stuck it out against all odds, and everyone likes someone like that, basically. Yeah, I love people like that. But again, Tesla. So if you look at Tesla, if you look at what Tesla's valuations, Tesla has gone over $1 trillion, right? You told me Tesla is worth more than all those companies combined. They have been around for the last 50 years or more, right? Or more. Tesla is worth more than them combined together, right? Have less cars. So let's say, okay, so how many cars did Tesla sell? That's how many cars all of them combined sell. That's how many cars Tesla sells. So does that, forget everything else. Does that make sense? Exactly. Does that make sense? Now, you cannot time a market on valuations alone. You cannot. And if you look at Michael Berry, he tried to time it on valuations, right? One thing he didn't realize was how much of a sentiment-driven market this is, right? Especially Tesla, with the bulls and big Tesla fans, basically. Right, but no matter how you look at it, this stock is way over, and the best way to time getting out of some of these stocks is actually looking at the moves that it will make, whether it will go parabolic. If it goes parabolic, it's going to come back down to earth, basically. Yeah. And that's what you have to look at. So, this is a great, it's a great website if you want to go to it. He's a good analyst, so it's called Wolf Street. Yeah. Go on that. So the next one, if we look at the S&P futures, right? Now this is all time again. So I'm still on all time, right? Let's do 5 years, right? So all time, you can see that there is a pin bar here. You can see how far it is away from all that moving average. This is the 5-day moving average, which is a fast moving average. It's fine. But look how far it is from the 20. Yeah, it is quite far. And year to date, if you look at year to date, again, now this was Friday's move. So it broke through both the 20 day. Now it's heading towards the 50. The 50 has to support, but you can see over time, it always goes back to test it. Can you see it? Yeah. This is where I'm going to teach some people a lot of cycle analysis as well. If I do a curve this way, and I do a curve this way, and I do a curve this way, and I do a curve this way, you take a ruler from there to there to there to there, you will get into time frames where it's suspected that the market will turn back down again. Crash, exactly. It's not a given, but it's an edge that you have. Right. So that move on Friday, which is why I'm saying that although that weekly expected move is 150 S&P, can you believe 150 S&P points from where we were? Mad. Yeah. Mad. So you could well come back 100, go past that 50 here, and then maybe bounce and then come back down again. Yeah. But each time it's breached that 50, it's gone further down. It's breached it, gone back to retest it, and then come back down again. Yeah. Now, seasonally, the stock market is always strong. You know, everyone talks about the Santa rally, and we've talked about it before as well. But the Santa rally really comes into its own when it's been an okay year, not the type of year that we've had this year, the phenomenal rise, you know, the phenomenal rise. So the only way you're going to get a Santa rally is if this market comes down, then towards sort of mid-December,
January, maybe January.
Mid-December, start by just before Christmas, then you might get that Santa rally. I remember in, I think it was 2018, where, you know, there was no Santa rally. The market just tanked. Remains to be seen on this, right? So you've got the next one is the Nasdaq. Again, if I look at the all-time highs, look at that.
Yeah, exactly.
Look at that. Right, and I know a lot of that is, you know, QE. You know, money being pumped in, basically.
Exactly.
Money being pumped in.
Yeah.
So, you know, again, is it going to come back to test it? It eventually comes back to test these lines. Yeah. Whether it will test it this time or in February or March, which is where I think it could retest this bit again. Yeah. With all the stuff that's going on. So that's the 5 year, and that's the year to date. I know on the year to date, you know, it seems, but you'll have to look at it on a longer term perspective as well. Now, I'm not going to cover crypto, but that's a crowd pleaser, isn't it? You know, look at this meme stock. No, not meme. So this is Shiba Inu, which went up completely mad. Look at that. Look at that. From there all the way up to there. Now, people made a lot of money, but again, look, it's done it before. It's done it before, and look what happened.
Started out, exactly.
Look what happened.
Look at now.
Yeah. So, you know, I mean, the other thing about crypto is that people have to be aware of is that there's a lot of people that keep bigging up cryptos as well, and they're bought here, they've filled their boots. And they're now telling everyone, all their mates on YouTube, everyone else going, buy it, to try and build up that euphoria. Yeah. You know, and it's the same in Bitcoin. It's the same in Bitcoin. Now, you know, I mean, I sold all my Bitcoin. Yeah. Well, I sold all my Bitcoin, right? I decided on a couple of grounds, which I'll share with people, right? First of all, you know, you had the climate change in Scotland, the meeting with all the world leaders.
COP26, right? COP26.
Yeah. Now, COP26, is it 26 or 25? 25.
Oh shit. COP25?
Yeah, I think, I'm not sure. So, you know, during Bitcoin uses a lot of external energy, a lot of electricity to mine Bitcoin, first of all, right? The other thing is Bitcoin is mainly held by a lot of big players who bought it so cheap, and all they're doing is bigging it up each time because their cash pile is not their cash pile. Unless they sell, their money is growing. So they're in this promotional market. So a lot of them, now, bearing in mind that I sold before this move came anyway, bearing that in mind, you know, everyone, they were all saying, oh, it's a safe haven asset, right? It's not safe haven. If you look at Bitcoin, let's just go to, I'm just going to move you, Kiki. Hold on, mate.
Yeah, that's fine.
If I move you there, let's just go to Bitcoin. It's on here. All right. Bitcoin. Yeah. So if you look at Bitcoin, look at, you know, you're saying it's a safe asset, right? So if you look at the 5-day, if it's a safe asset, when things crashed, why didn't it go up?
Yeah.
Why didn't it go up? Yeah. So it's not a safe haven. Bitcoin is just like the market, and it's always acted the same as the market. So if you go back 5 years, you know, when the crash came?
Yeah.
The COVID crash, look at that, came back down. Yeah, came back down. So again, it always retests this. Now, whether it hold or not, I don't know. But, there's a lot of talk about crypto, and Ether did the same as well. So there's a lot of talk on crypto. Kiki, do you want to add anything?
Yeah, I think the other thing as well is just add on to the point you were saying, right? It's like when the hype is always there, and we've seen bursts of this now. We've been in this market for 3-4 years now. We've been talking about this and been involved in this kind of stuff. Like, this is my standpoint on crypto, right? We are a far-fetched mile away from crypto becoming an actual use case where we are genuine. Not for this, because even now people buying, holding, converting it to fiat. That's not the point. Where crypto wants to head is where we use the digital currency and the digital currency itself. We're still a far fetch away from that. Yeah. So right now it's so people are making money from it. That's all it is right now. It's just this little investment machine, if you invest smartly at the right time, to be able to make yourself some quick cash. And that's just the truth of it, right? There's no one out there that can say, no, we're holding on to this to basically, useful, but our future case isn't here yet. That's the whole point. The whole world is just running wild, trying to catch these small coins and stuff to try and make a quick buck. Now, if you're doing that, no, I'm not saying that's a bad thing. We've all done that. I've made some money in crypto. Marttand's made some money in crypto. Just use it for what it is at the moment, and don't get. Like I said, Shiba. I know so many people that invested at the high because apparently it's going to go up another 200%. Look what happened to it now. And those people that would have invested, the same thing that happened with Bitcoin. Same thing that happened. What happened. Yeah.
Hold on. Need to just charge something.
Yeah, cool.
There we are. Sorry.
No worries.
Minor error there, guys. IT error. Not enough power. It's that Bitcoin mining that I'm doing in the background, drawing all my power.
That's why he's got a virtual background. Like, you can't see the mining machines.
That's it. But the other thing I wanted to add on the Bitcoin side, it's not knocking Bitcoin, but the other thing that I wanted to add is, a lot of people talk about Bitcoin being a currency. You cannot use something that drops 7%, that drops 50%, 20% as currency. So let's say, can you imagine if you bought your flat in Bitcoin? It's not possible, because the guy would have, following day, he looks at it and go, bloody hell, I've lost 7% or I've lost 20%.
Change the asking price.
It's not. It's not. It's pure speculation. And there's nothing wrong with speculating as long as you're on the right side of the market.
Right side, right? Exactly.
Yeah, whether it's a store of value, does a store of value really drop 20%?
Yeah, exactly.
15%, overnight. So a store of value is always a little bit of a safe haven. Yeah. This is pure speculation, but a lot of the cryptos, I believe in blockchain technology, don't get me wrong. But one thing, the other reason why I sold Bitcoin is because most of the guys who bought Bitcoin, who are bigging it up, and there's some really big people on the internet bigging it up, they all bought it here. Yeah, they want it to rise, because one guy, actually, there's a hedge fund guy. I forgot Raul, I forgot his name anyway, but he invested and bought £1 million of Bitcoin. Yeah, obviously he's loaded. He bought £1 million of Bitcoin. His Bitcoins now are worth 1 billion.
Mad.
Right, and you hear stories of people actually having bought Bitcoin or Shiba or coins like that when they were low. Now all of a sudden they've become billionaires overnight. So they've all got a vested interest in doing that. If they sell some of that, they can buy some of the lower coins and then start bigging that up on the internet, and then it will rise again, because all of a sudden people will rush into it. So use crypto as what it is. It is a speculation, whether it's store of value or not, or has an asset, tangible asset. It doesn't make a profit. It doesn't make a profit. It doesn't perform a function. So when we're buying company shares, they're making profit. When you look at pure crypto on a analysis basis like that, then it doesn't make sense. But so there's a whole host of things. But I think, if you're going to trade it. But don't necessarily keep it. Because people buy it here, they hear someone saying, "Oh, it's going to go to 2,000, 200,000. It's going to go to 1 million," right? And they're all piling here, and these guys are all piling out. If you're going to buy it these when it hits these support levels. If you're going to buy it and you've got genuine interest in it, buy it when they're hitting these support levels. Buy it when there's less hype around. Buy it when there's a crash. And only invest the money that you're prepared to lose, because these guys who've bought it here, they don't care if it drops like that.
Yeah, exactly.
I'm sure that they've sold some. I'm sure they would have sold some, but they're keep bigging it up, very much like Elon Musk did for Dogecoin. And then from Doge, I know some people actually sold some of their Bitcoin and bought Shiba Inu. Right? At a low price, and it went up, and they've made loads of money off it. They sold out, and a profit is only a profit until you sell out and realize your gain.
Exactly.
Right? So let's have a look at a couple. Should I leave you to cover silver on your chart, or?
Yeah, I can cover gold and silver. That's no problem.
Yeah, okay, I'll leave you that. Okay, the other one, what amazed me was crude oil, right?
Yeah.
Crude oil, again, collapsed. If you remember, this was the COVID crisis, right? And look how badly it crashed.
Yeah.
Now people are thinking, well, actually, we've got the new variant. People won't fly. People won't travel. Blah blah blah, and it will come down. Lo and behold, So again, in a high inflation environment, you actually want to own commodities. You don't want to. You want to own commodities in a high inflation environment because the prices will just keep going up. The other thing in a high inflation environment that you've got to own is stocks that pay you a dividend as well, right? Because that dividend protects you a little bit as well. So high-paying stocks that pay dividends. So again, oil crashed 12%. Look at this, 5 days.
That's crazy.
Look at that. Crazy. That's madness. Right? Now, I actually was tempted to trade oil. I was very tempted because, when I looked at the charts, it was overextended on the downside. The RSI was so oversold. It was incredible. But that's what I'm saying. This is a liquidation break. Yeah. People have been caught up because people are thinking oil is going to go to $100, or everyone's going, $100. When the hype comes out, be very, very worried. When there's no hype, that's when you should be buying, just little feeder, Exactly. But when the hype comes out, it's going to 100, it's going to 200. That's so a lot of people would have bought, and this is margin call. Margins. I had a margin call the other way, but this is margins all the way down. Right. Exactly. And people having to liquidate, and a lot of funds would have to have liquidated as well. Right. Again, the dollar was amazing. The drop in the dollar was absolutely amazing on Friday. Normally, the dollar is a safe haven asset, when it's risk off, the dollar should actually go up, but it didn't, which is really weird. So it almost seems like liquidation. A lot of people were forced to liquidate. That's the Dow Jones. But again, if you look at all time, that's the Dow Jones all time. But that's all time. So, if you look at it on a 5-year perspective, it's slightly different. That's the COVID crash. COVID, Now, there's no doubt that company profits have got better because they've got a bit more pricing power with inflation coming in, right? So companies that have got better pricing power with inflation coming in, they're the ones to actually own during this financial, this inflation rise, basically. The UK now, I did trade it on Friday because I thought it was overcooked, right? And I got out. So I made a small loss, very small loss, because I was waiting for a bounce. Actually, I traded it 5 times on Friday. First time, too early, sold out. Second time, bought it again, waiting for the bounce, bounced, great. Made back the money that I lost on the first trade. That's great. Third trade, tried it the same. It dropped a bit more. So I tried it the same. Yep, got a bit back, right? Towards the end of the day, I thought they would rally it back. I actually thought that the US would, because it's Thanksgiving weekend. So I thought they're gonna rally it back. They're gonna try and save it somehow. They didn't. So then I sold out. So I net break even. net break even. But again, if you look at what happened on a 5-day perspective, that's pretty decent move. Yeah. And it's going down more. It's going down more because everything took a hit. Yeah, everything took a hit. So what else we got? I covered that. I don't know if I've got, I wanted to show you wheat. Again, things like wheat you should be owning. You can own them. Sugar, right? Yeah. This is sugar. Right. So look at 5-day. Yeah. So that's 1 day. So sugar didn't take much of a hit. Wheat didn't take much of a hit. Went up. Yeah. Why? Yeah, inflation. Exactly. If people still need to eat, right? Inflation. Copper futures took a hit because they thought it would be slowing growth, right? I'm trying to find the Nikkei. I had it. All right, let's if I can't find it, we'll just leave it. Is that no, that's Nikkei, right? So one thing I want to show you about Nikkei, okay. I'm gonna say, me in my investment cycle, I remember, because I got into trading in the 90s, right? Not investment, not trading. Trading was a little bit after that, right? Yeah. I bought at the time a not an ETF but an investment trust, and I think it was an Invesco Japanese fund that I bought. I bought it right there. Wow. Like this is I bought it there, £6,000 in an ISA. That's what I bought. I went all in. That's great. I'm going to put £6,000 in an ISA, and I bought it there. Right? Or thereabouts, right? Yeah. Lo and behold, it took me this long to actually make my bloody £6,000 back. I've made nothing out of it. Yeah. To make that investment, Invesco, I sold it out, but the purpose of this, and for me to show you, is everyone was talking about Japan, how great it was, it's superb, it's the best investment place ever. Look what happened. This is what I think is happening into the US market. Long term, I think this is what's happening. Now, there's 2 caveats, and it'll be interesting to have other people's take on it. When you look at, so I'm a boomer, right? Boomers spend less money in that age, now that the age that we've got at. They spend less money. So the number of boomers is obviously lower than the number of millennials. Millennials actually spend a lot more, right? So what they're hoping for is millennials like you, Kiki, you spend, you're in your growth period now. Yeah, accumulating greater income, buying property, buying this, buying that. So you're in that phase. So there's more, the number of millennials that are around is far higher than the boomers. So the contrary argument is that a lot of investments are using is saying, well, okay, the boomers have had their time, they're going, but they're cashing out of bonds and stocks, right? And the millennials are coming along, which is what we may have seen, with this massive rise in the stock market. Embrace the stock market a huge amount. So that's the contrary argument on this bit, right? It collapsing because valuations are crazy and everything else. But I just wanted to show this Nikkei chart to people and see how long it's taken. Now, we are trying to, Japan is in a huge debt cycle, right? I think they're 2.5% GDP borrowing again over the GDP. It's crazy. amounts, right?
Yeah.
The US is heading that way as well. You can't borrow your way into profit, right? So something that everyone has to be aware of. Now, markets like China, India has done phenomenally well as well this year, right? Again, everyone's talking about India, yeah, because there's 1 billion people there. There's 1 billion people in China, right?
Yeah.
And the Chinese market is taking a real hit because of the property. There's been, I think people may know, a company called Evergrande, right? Evergrande is a big Chinese property, the biggest Chinese property company. And they're in financial difficulty. They can't pay their bondholders, so everything's coming down. And China is actually trying to slow everything down, which is sensible, right? Which is what the West are not doing. China is actually realizing that the wealth gap between the rich and the poor is getting wider and wider. And obviously they don't want a revolt, right? They've been trying to actually, so Alibaba and things like that, they've been Tencent, they've been on them all the time, and tighter regulations, tighter this, tighter that, which I think is a good thing. But I think in the long run, China will perform really, really well. So China will be a buy at some stage, may not be a buy right now because of what they're going through at the moment, but it could be, well, if you're going to do it, don't do what I did here, do here. With China, maybe, or anything that you want to do, So just quickly, and then I'm going to hand it back to Kiki. Let's do some property stocks, okay?
Yeah.
So that's Rolls-Royce. Rolls-Royce would have taken a hit on Friday as well. Okay, so Taylor Wimpey, right? Taylor Wimpey is a UK house builder. Right? UK house builder. You've seen what's been happening with house prices, right? Taylor Wimpey is middle market. So it's not upper end. It's middle market, Taylor Wimpey.
It's like affordable sort of.
Close to. Well, nothing's affordable at the moment, but you know what I mean? Yeah.
Not a Barrett. Barrett are more
not
like
a Barrett.
Quality,
not a Barrett. But again, so if you look at April, right? Look at April. Now, if property prices were going to continually rise, property stocks should be reflecting that by an increase each time. So this is a secret that I'm giving away to people. Please share the video. This is what I look at. When I'm looking at it going, okay, so the rate of change, is the rate of change positive or is the rate of change negative, right? So when I look at the rate of change, this was April this year, when everyone's going, oh, property prices are going up. Do you remember? You were looking at the time as well. Can you remember? Right? All of a sudden it came back down, right? Then went back up. This is forming for me lower highs at the moment.
Lower highs.
And it's now down, right? If you look at Barrett Developments, again, same thing. In March, it went up.
April,
Big gap down yesterday. A lot of hard selling, right? If you look at all time, or 5 year at least, right? You see, this is the COVID crash. Never made it back to the COVID. Yet, property prices are far greater now than they were during COVID. There's a disparity here. Do you understand how my mind thinks sometimes? Right. Exactly. So I think, well, there's a disparity. What's the disparity? What can they see that I can't see? What is going on? It is rising, but property prices have been rising, and this has not kept up pace with that. It could be wrong. It could shoot up. But their profits are all right. But because of the higher inflation, the material costs are costing them more as well. People can't afford it, right? British Land. Now, British Land is a commercial beast, not a. The other two were residential. Again, look at British Land, right? This is British Land in 2000s, basically. So again, you've got to be sensible in where you buy stuff. Right, you've got to be sensible and also have stop losses to get out. Persimmon, again, is a quality builder, but again, and it's pretty well run actually. Persimmon, pretty well run. So again, Persimmon's house price, because it's pretty well run, is still not on the peak. Still not on the peak. it's actually showing higher highs at the moment, unless it breaks this, basically, right? Bellway, again, very similar to Taylor Wimpey, same sort of thing.
Taylor Wimpey,
yeah, similar, right? Again, look at where the high was, and then look where it is now. So I suspect, when Redrow, again, a house builder that does more affordable housing as well. Look at the whacks that they took on Friday. Look at the whacks that they took on Friday. This is a continuous Bitcoin chart, by the way. So that's why it's up and down, basically. Yeah. So that's basically it. I hope people have found it interesting, right? Again, with property, what's been going on with my own journey, I'll tell you now, and I'll share that with people. We've had 2 developments going on, and it's been a nightmare. This year has been an absolute nightmare on the health basis for me personally, but also getting good, reliable people to do work for an honest day's labor, right? They all seem to be charging way over the top because there's a shortage. We had a lot of Eastern Europeans, especially the Polish community, that moved away back to Poland because Poland's been doing really well, which has left a gap. A lot of landlords exited the market, which, believe it or not, rents have actually gone up now. So rents in London have stabilized and they're on the rise again, mainly to do with inflation as well and the number of available properties to rent out there. Yeah, that has dropped, the number of available properties to rent out there as well. Right. So if you're looking at property, I always say property is a long-term game. Yeah. But one thing that you have to look at is an investment vehicle which pays you a good dividend, or in this case, a good rental yield, right? That even if the price falls, you're happy to hold it. Yeah. But all this property stuff and the stock market is being propelled by easy money. If they stop that easy money policy, and I say if, because actually, let me ask you a question, Kiki, right? Do you think the stock market and markets overall, general property markets and stuff like that, have become too big to fail, like the banks did?
That's an interesting question. That's an interesting question. I'm gonna answer that with a bit of a twist. This is what my thought process has been, right? The last, like I said to you,
let me unshare while you're doing that. Let me unshare this screen. Right?
Yeah.
How do I unshare it on this bit? Nope.
I think.
Stop sharing.
Yeah.
There we go. Yeah.
Remember I said to you a few videos ago, right? I said to you that obviously I haven't been in the market as long as you have. You're way more experienced than me, but I know, especially from learning from you, but also in my very first early years, the way markets used to behave and way markets could fail, right? And you are no longer. And when things like Tesla, right, especially and things like crypto, obviously putting that into it. But let's forget crypto. Let's just focus on stocks right now, where this whole startup mentality, the whole valuation, the company is based on a valuation without any actual tangible assets. The whole like Airbnb model, the whole Uber model, where we don't own anything, but we are valued everything. Right. Yeah. As soon as these things started coming into the market, I swear there's been a complete shift in the way companies have become completely untouchable. Right. And obviously with things like QE and injection of money, it just helped. Like now we can literally say, well, what really is the dollar or the pound worth when the government could just decide to inject another few trillion into the economy. So it's like this. We've got way ahead of ourselves. The governments and the people that control the central bodies have got way ahead of themselves, where it's got to a point where it's just uncontrollable now. Now we just get into debt. Okay, cool. Just print off another trillion, and then that will sort the problem for the time being. So then that means obviously then that gets distributed out into the economy. And then obviously the wealthier become wealthier, the Amazons, the Teslas, and all these kind of guys that all these wealthy people get a lot of money. What they do, they chuck it into these companies because they know that these companies' valuation is high. So yeah, it is sort of like, what are these guys becoming untouchable? Like the banks, they can never crash sort of kind of thing. Because where are they heading? Where like without actual without actual, like the Tesla thing was the biggest example. Come on, like their main thing is buying is making these cars, right? They're making these electric cars, right? Regardless of how good or bad their technology is. I've never driven a Tesla myself and tested it out, but that does not stack up against how many cars competitors sell. Even one of the companies, Ford, most probably sells way more cars alone than Tesla does.
They all do. Yeah. They all do.
So where in the right mind does that make their Tesla's valuation? Is that because of concepts, because of future ideas, because of Elon Musk's valuation, because in actual fact, his personal projects and SpaceX and all these other things and Neuralink and whatnot should not be reflective of the company's valuation of that individual Tesla's company.
No, because it's a different company. It's a different company.
We don't value the person. The person's value is just his net worth, whatever money and assets and liabilities he has as a net of that, but not as his company's net worth. We don't look at JP Morgan's with Mr. Demon's net worth, like his valuation, right? Whether it's Mr. Demon or somebody else that comes in, value JP Morgan's JP Morgan, right? So I definitely think it's just. We've been saying this for a long time. It's a very weird market, and me being a newbie into this market, I can just see it's a weird market. It's basic. It's economics. I did economics in A levels, and I can understand the basics of demand and supply and price going up and inflation, and it just does nothing stacks up. Nothing, and even the property stuff, right? It just doesn't stack up. So. Yeah. It's just weird. It does feel like there are these untouchables out there, and obviously we talk about these the wealthy few and the wealthy company. I mean, the Google, the Amazon powerhouses now. These guys are sort of taking over the world. Facebook. I mean, there's metaverse stuff. Pros, cons, whatever it is, but the fact that these companies can bring out ideas like that now is just. It's just insane,
It's to beef up their stock prices, really. They're all publicists, but because the thing is the reason why they injected so much when the stock market tanked into the into the countries is because at the end of the day they think that the higher stock valuations will mean that people spend more money, because it's all a consumer-driven environment. The UK, the West is all consumer-driven. Right. Yes, Germany makes a lot of stuff, right? But and as does America as well. But it's still generally consumer-led, right? Yeah. And it's trying to keep up consumer confidence. Now, when consumer confidence came out, it actually hit the lowest. The last reading, the sentiment was quite low, right? And the stock market still went up. Like, okay. And then the other thing is that with this sort of valuation, you're going to get these big bold moves, basically, right? You're going to get them, and it's to be too big to fail. If the stock market crashes, I think they may come back again and inject more money. It's like, what's the definition of insanity? Doing the same things over and over again. Right?
A different result.
And now they've got it so that if they don't, we're going to have a depression. We will go into a depression. So that's why I said, are we now too big to fail? I don't know. Right? Is this why the market is going, well, Jay Powell will save me, or they should have been raising interest rates a long time. And I'm a property guy, and I'm saying that, right? The reason why I say that is because I like nice and steady. Nice and steady. Exactly. Ballistic moves mean ballistic moves down as well. Nice and steady. That's it. No one's crunching away. Everyone's just minding their own business. It's just going up. This sort of move is frantic. It's not good. It's not healthy.
It's not healthy. It's It's the last thing I want to add to that. It's very reflective of the way technology, the way generations are going as well. Everything's quick. Amazon Prime, one day, same day delivery. We can get, so where we move, Milton Keynes, I can order from the local Tesco. There's a little mini robot, right? I can order my groceries in a robot. The robot for 99p only, doesn't matter how much I order, will come and deliver in a little car. I will send you, when you come, you will see it, but I'll send you a video.
Wow, okay.
The robot will come. So now I don't even need to go to the local Tesco, which is
the
insane.
robot will come.
The robot will come. Just deliver
How big is
groceries.
Come on, Matt. How big is it? How big is it?
It's like this big, around this big, and around this high. And it's got a little air. It's like, you know, Wally. Have you seen Wally?
Yeah.
It's like a little Wally, basically, and it drives to your door. And it's hilarious because it knows when to cross the road. It knows it. So when we go to when we drive and there's a crossing, the robot will be waiting. He's waiting for the traffic to stop. It's like a human. It's freaky. Yeah. It's like a toddler walking on the street. Yeah. It'll wait. As soon as it knows it's clear, it will go across the road. And it's just it goes on the pavement. It doesn't go on the road. It goes on the pavement, so like a normal human would. Yeah. Honestly, it's just, but this is what I'm saying.
How do you actually get into it? Do you have a code to get your stuff out?
So basically, we haven't tried it yet, but the concept is you download.
Oh, you got to try it, Kiki.
I've got to try it. Yeah. I'm trying to not be lazy. Is what I'm saying. Because I know once I do it once, that's it. There's no stopping me. So you download the app. You order the groceries. The lady or person or man packs the groceries from the store into the box. The robot then comes to your house, delivers it, and it obviously knows because it's near your app. Basically, it's your app that you've ordered it from, and then obviously you must already tap it.
Then it opens up.
Then it opens up. You take your stuff, and it walks back to the shop. So that's what I'm saying. Like
that's amazing. Technology's come a long way. You know, technology's come a long way.
And it's this sort of fast life is why people are so interested in things like forex and cryptos and all this kind of stuff.
Yeah. But like I said, the millennials, because the millennial your generation, very, very, very interested in that, and that's a great thing, by the way. It's a fabulous thing, you know. But hopefully you'll learn from old fogies like me.
No, but the thing is, it has its pros and cons because it means that, like you said, things can go up like this, but they can go down like that. Yeah. Right. And that's the cost of it, which means that really most people are going to end up losing. So whereas like me preference, right? Fair enough. Like last year was a great year on stocks. I did over 50%. This year, even, I'm doing over 50, 60%. But really, I'm just aiming for 10%. I'm just aiming to do at least 10 to 15%. I'm happy a year. It just happens to be that obviously the stock markets are the way they are, and I know when to get out and get in. Yeah. I'm doing 60, 70, 80% a year. But the point is that I'm more happier having consistent growth as opposed to having these massive spurts. So I got more in stocks than I have in crypto purposely because I know I have more control. Not me, but I know the market has more control in terms of what it returns to me. The market isn't going ballistic like the crypto market is, right? Yeah. So I feel like it's good that there's sort of quick, but I also think it's a bad thing because also you don't appreciate it then, right? There's a joy in investing your money as well, right? There's a sort of euphoria that comes with it that you're like, okay, I'm putting money in, I'm making money, but like when it happens like overnight, you're on up 1,000% or 50, I feel 1,000, maybe 50% overnight or something, whatever, 15. And then all of a sudden the next day is down 15%. It's just like your mental is not in the right place.
Yeah, actually your psychology, it affects your moods quite a bit. Yeah, it affects your moods quite a bit. Yeah,
exactly. Yeah. So I'm not completely with it, but I understand obviously where it comes from. It's just this sort of
an investment. On this channel, we're an investment channel. So we talk about longer term investments. Longevity. Yes, we talk about trading, which is short. You could do day trade, you could do whatever, weekly momentum trade. But at the end of the day, you're also investing. Some of your capital should always be investing. Exactly, I mean, actually, I don't know. Look, there's a guy who a YouTuber, fantastic guy in Holland. I'll try and find him. He did a great piece last weekend, and I was pretty impressed by what he'd, the numbers he was showing, everything else. He's a lecturer in one of the universities in Holland, right? I've forgotten his name, but so he made some valid points. We will have to pay the piper, but we don't know when, right? But most people in the market already know this, right? We have to pay the piper, but we don't know when. So we can't use valuations to necessarily determine it. We can use charts, stuff like that. But there will be a price to pay because it cannot go on forever, right? And when it comes back, it's going to be too big to fail. They'll try and pump it up. Will it then just say, listen, you've had all you're going to get, I'm still going to go down? I don't know. It's like when President Biden came in and basically said, well, I'm going to tap into the oil reserves. Oil tanked for a bit, just for a nanosecond, went straight up. It actually went up rather than down when Biden came out and said that. So the reverse action. But again, if inflation is there, what are you going to do? So the best investment strategy at the moment would be not, if you are trading, you're in there, you've made a decent profit, always take, like I say, you can't go broke taking a profit, right? Now, I did try something a couple of years ago, which was because property is quite hard to sell, right? But if you think there's a crash coming, it's quite hard. I actually shorted some of the property stocks to offset if property prices are coming down. But that's slightly different. Right? It is a riskier game to try and do it that way because then you're trying to make it on the downside. But again, look at charts to do that.
Exactly.
Yeah. So you're going to start singing the blues because you got the guitar in the background.
It's actually Selena's. Much better.
Oh, she's the musician. So who's the painter? Is it an easel that you got there? Yeah?
No, so Debbie, she's a musician. She also plays the piano, practicing playing the piano as well. So
okay,
I think
good.
there'll be a piano in here soon, maybe in one of the videos. Good. So
nice. Nice. Well, look, do you want to cover just gold and silver?
Yeah, that's what I was going to do. So let me just get the screen sharing 1 second. So let's do this. Okay. Gold first. All right, cool. So obviously, so mind some of my chart. Let me move this out of the way 1 second. So a couple of weeks back, September, around the first, the week of the first, I think it was, we had no, sorry, not a couple of weeks back. Last year, about a year, just over a year ago, we had the high, right? We had the high of reaching around
2060, something like that.
Yeah, 2069, 2070, around 2070, basically. And since last year, obviously, we had a massive rally from like 2018 all the way to 2020 is non-stop, basically, of gold rising. And the big news last year was that actually it was all-time highs for gold. It was massive all-time highs. So obviously, it was a big thing. And I sold a bit of my gold around here because I bought it. I think I bought it around here somewhere in that year. But since then, obviously, we had a bit of a crash. I was expecting a deeper sort of, and I'm still, Marttand, would be good to get your perspective on this as well. I was expecting that. So that's on a monthly. If we go on a weekly, I was expecting a bit of a deeper pull down as well, coming to a region of at least 1500s basically. But obviously that yet still hasn't happened. And if anything, right now I feel I'm more bullish on the gold. Basically, I feel like by the end of year we could be looking to go back up. And testing the high highs of last year, basically, and reaching that sort of 2000 region. We did have a bit of this is what I was talking about in a couple of weeks back. So starting around October, we did have a bit of a rally starting again. I've just got this general trend line here, obviously going again. We had a sort of bounce of that trend line. Obviously, some people use trend lines, declining trend lines, some people don't. I do sometimes. The gold for me, they've worked on most occasions, but again, we had a bounce. And the key regions really for me were, again, this region of the 1866, right, 1860 basically region. We didn't break that. After that, it'll be around the 1911 and then 1950 basically region. So we need to break those three price ranges clean in order for us to even consider. Now, I'm not 100% sure whether that's going to happen, but I'm sort of banking on the idea that December usually is a fairly positive month for precious metals usually. So again, might not happen. I think it was either last year or the year before we didn't actually get a rally in December.
No, we got one last year. We got one last year.
I think it was the year before when we had the pandemic sort of looming.
Yeah, with the pandemic, it was a risk-off move, and even gold and silver came crashing down.
Yeah, so that was a year we actually didn't. So let's see what happens this year. But really, we've got a very, very strong region of support.
Yeah. So can I ask you, Kiki? Did you go in? Did you ease yourself in? Have you still got a little bit that you need to buy? What'd you do?
Yeah, so I basically bought in. I bought in around August time, so I think it was around 1700 region basically. So I think it was around 1700 to 1705. So it's in like 2-3% or whatever percent profit at the moment, a little bit more than actually. So I'm in positive profit, but basically I bought most of it was then, and then some of it I bought around October, just end of October or beginning of November, when I sold my the semiconductor stocks, basically some of them. So I bought some in here. So overall, it's around 2% in profit at the moment. So just a bit over, but I'm expecting a rally now. Really, is what I'm expecting. But we'll see how it goes. So I think that's where it really is for me, and gold in terms of that. But anything to add to
Kiki,
yourself?
Can you do a longer term chart?
Yes. So this is a weekly. This is a monthly. Yeah.
All right, monthly. Yeah.
Yeah.
Okay, so it was 2000 with the COVID crash.
Yeah,
COVID was 2019, wasn't it?
Yeah, so COVID crash was 2019, and I think around.
See, to me, that's forming a flag pattern.
Like that's
a bull flag. It's forming a bull flag, right?
Yeah.
When I look at that, I go, but like you said, seasonally, gold and silver perform really well in December, the run up to Christmas, and then January and February they perform really well.
Yeah, exactly.
Obviously, if the flag fails, then it's going down.
Then it goes
but
down.
That, exactly. At the moment is a bull flag formation.
Bull flag. Yeah, exactly. So I think that's where it sort of stays. But I think the biggest thing that I've been focusing on here, Martin, is this support region. Since June this year, we've not been able to break this sort of region. I mean, we could even extend this down to here, right? This sort of region here, we've not been able to penetrate it at all. And that's the biggest sort of indicator that this thing doesn't seem to be wanting to go anything below.
Yeah, it's got a bullish stance to it. So, I mean, again, seasonality, you've got to try and play favors in odds in your favor. So seasonality wise, we know that it's a strong seasonal period for gold and silver. So, if those people who, want to invest, it's a good time to invest. It's a good time to accumulate towards the end of November, depending on how this week goes, right? It's a good time to accumulate.
Yeah, exactly. And on the daily, what we've had, obviously last week we had the breakdown, but it looks like the price is stabilizing again. We could be looking to shoot up again. We've got a formation of higher lows here, basically. So again, on a daily, it's looking like a bullish formation. So as you can see that happening. So so hopefully it will be worth selling those semiconductors.
You saw the charts. I think those things that went up holistic. If there is a correction, then everyone. But I was surprised at how well the Nasdaq held up. I really was, and I think that it may come in for a beating because then everyone will just rush out of it. But I think gold and silver at the moment. I think that's a pretty good trade. But I mean, the other one is soft commodities as well. Now it's amazing, with inflation, gold never went up. With inflation rising, gold never went up. But gold also performs well when bond yields start going down, basically.
Going down. Exactly. So
we live in interesting times. I think it's a good opportunity, and I bet you in February when we're talking, you'll be going, "Why didn't you follow us, guys?" And I think I traded silver on Friday. I did trade silver. It took a little bit of a beating. I traded silver this week. It took a bit of a beating. Made reasonable profit on silver. No losses, so that's fine. yeah, I just wanted to see, and I sold out the position on Friday because everything was just looking. I don't know what's going to happen here. So I've got my profit. I'm just going to bank my profit, and then I'll come back and I'll have a look on Monday. If it tanks, then I might go back in. It's fine. And so that's what I tend to do. Accumulate like that, watch what's going on, and go, it's good. No, it's bad.
Exactly. So, exactly.
Right. So cool. I think it's a good time to wrap up. Yeah, and I hope people have found it interesting. So please, you're gonna render it and put it out now.
Yes, we're gonna get this up.
But definitely share this because Sunday night could be an absolute game changer.
Honestly,
it could really be a big game changer. So it could be the COVID, the COVID crash that came down. Yeah. It could be like that, which gapped and gapped and gapped and gapped.
Definitely.
So it will be interesting. So I'll be glued to the futures. Think about me on Sunday night, 11 o'clock.
Get your wallets ready, basically. Sounds good. And just as a reminder, Marttand, we'll also plan in the new year, once I'm back down in London, frequently meetup for the Infinity Wealth Group.
We're planning that
meetup. I think it's about time we did that. So
definitely. But it all depends on COVID, right? It depends on
that's true as well.
COVID numbers. But it should be all right. Should be all right. Fingers crossed.
Well, remember again, guys, make sure to like, make sure to subscribe, make sure you hit that notification bell, because now we're going to be doing regular videos. Now I'm settled in. I said to Marttand, come on, let's do it. I'm free this weekend, and we'll be now. So we're going to go back to doing regular videos. Of course, we've both had all sorts going on, but we're excited to be back at this and doing the regular updates.
Absolutely, and we'll do one next week to see how it's all panned out and see what's happening. But once again, this is not financial advice. We're not. We want you to grow wealthy, which is why Infinity Wealth was developed, right? To educate you, not to necessarily just be, I've put all my money in, I've lost it all. Just to educate you. Slow and steady always wins, right? Slow and steady always wins.
It's an education process. The same way I learned from Marttand, and the same way that the videos that we put out earlier in the years, we were very transparent about what we're putting our money in, and we can tell you, especially myself, I made a hell of a lot on the semiconductors, and so obviously over the moon with that. But now, how do we move from here? So again, not financial advice, just education. We're just sharing our experiences with you, and of course, everybody can learn from experiences. So hope you enjoy the ride.
Okay, so share and like it. All right, and we'll see you. Hopefully, we'll see you next week.
Next week, definitely.
All right, take care, everyone.
Take care.
Bye.
Bye.